Stick around to the end of this video for quite possibly some of the most surprising predictions about real estate going into 2023. In this episode of the Canadian Real Estate Market Update, we're going to talk about some burning headlines like Bill 23, the Paradise Valley protest, foreclosures, what's happening with the rental market, and we're going to dig into the statistics to see how those compare against what's actually happening in the marketplace. If you're new to this channel, welcome. My name is Justin Conoco, one of the co-owners of Prime, along with my incredibly smart wife. We have one of the best teams on the planet. And the fun thing is I'm hyper connected across North America. I speak at a national level, and we are one of the top producing teams that covers all asset classes of real estate. So what we'll do in this video is talk about the macro and then share what's happening on the micro. Our team is located in southwestern Ontario, with London, Ontario being the center. Fun facts about London: it is a test market for multinational companies. Amazon's coming to the area, and it's an earmarker of what's happening at a national level. We have access to primary markets. We cover from Kitchener to Sarnia, Lake Huron to Lake Erie. So we'll really dig into what's happening across multiple types of real estate. And the biggest thing about these videos is I'm not here to sell you anything. More than anything, we want to be the purveyors of information, tell you the truth, and be the most trusted name in real estate. And if you're looking for an agent anywhere on the planet, make sure to hit the links below and connect with us directly. We actually can connect you with Ryan Surhan in New York, amazing people in the UK, Australia, Texas, anywhere on the planet. We're doing tons of relocations off this channel to places like Florida every single day, and again, across Canada. So make sure that you let us know who you are, where you're from, and you connect with us. So a couple of the burning headlines I want to cover before we dig into the stats is the Paradise Valley home protest. Definitely want to have a discussion around foreclosures, the ban on foreign buyers, and what's happening in the rental market, because I think all those are super important pieces of information for you. So first, the Paradise Valley protest. You had buyers that purchased new home constructions and now are struggling to close, so much so that they are protesting against the developer. The builder is saying, we don't want to be homeless. This is a protest that has gotten national attention. Love to know what your thoughts are about this. Jump in the comments. And we see it from both sides. There's definitely something wrong with the way that we're doing the purchasing of new home construction in Canada, because typically you're purchasing at a future value. That home is not going to be constructed for 8 months. And in many instances, your financing institution isn't going to pull an appraisal until that home is completed to a certain degree. Now, what happens if you agree to purchase a home at a certain price and a correction happens like it's done over the last 8 months? Well, the equity in that home could be significantly less, and that builder has that set price and that agreement in place. So if you don't close, there's a few things that can happen. One, make sure you call a lawyer. Two, they can keep your deposit. Three, they could potentially sell it at a lower price and then come after you for the difference. You can understand how this is a very stressful situation for the buyers. But if you look at the history of new construction over the last 3 years, in many instances, buyers were purchasing properties that almost doubled in value. The material costs went up, and the builders were in a position where some of them had ironclad contracts and did increase the price on buyers, but others did not have that ability. And in many instances, maybe didn't make any money because the increase in material costs, supply chains, all those projections were completely out of whack. So this is an instance where I would say two things that could have been done differently for these purchasers to put them in a better position. One, understand the nature of the financing on the purchasing of new home construction a little bit better and go more in depth with their mortgage broker as to the risks, as to what could happen if the prices were to drop. Second, one of the things I have seen as a common thread amongst new home construction is these buyers feeling pressured in going directly to the builder and working with the builder rep, or thinking they're getting a better deal working directly with the builder. The sad part about that is they don't have their own direct representation. They can think, well, I got a lawyer and that's enough. In many instances, that is not the case. I remember, and if you go back to my content, I've said this over and over in many instances, back even when the market was crazy and builders were increasing prices, we killed contracts because we didn't like the way the contract for the builder was structured, being open-ended, and then it can increase the prices to whatever they wanted. You know, you have to make sure you work with somebody that's an actual expert. And I'm not talking about Uncle Jimmy, the real estate agent who sells 3 houses a year. I'm talking about somebody who understands new home constructions, what is right, what is not, and then puts you in touch with a lawyer who is an absolute expert at understanding the new home contract and explains to you that relationship. So I think, making sure that they understood what they were getting into would have been critical in the beginning, but now they're in a position where they are tied to a contract. So the first thing I would do if I were them is I would definitely be calling a lawyer and working with the builder reps directly. definitely a story that we're going to track over the coming weeks. The second story I wanted to cover was the Canadian ban on foreign buyers. I'm going to make this one a very quick one and just give you my thoughts on it. As you note in the headline of this article, it actually says that it won't apply to many workers and international students. So the headline sounds great. Oh, we're banning foreign home buyers. Look at this. We're going to make homes more affordable for everybody in Canada. The reality of it is, I don't even think this is going to be a blip on the radar. This was done in BC previously, barely affected the marketplace. And I think this is going to be a nothing burger for the inventory levels coming into 2023. And fun fact about the Canadian real estate investing cycle, many of the investors are local Canadians that are looking for deals right now. So I still think we're going to have an inventory problem going into 2023 because there's not that much new supply coming online. There's a whole bunch of new immigration, and we're seeing that boots on the ground, which we'll get into in the stats. The next thing I want to share with you was the mortgage delinquency rate. I think there's a big misnomer out there that properties are foreclosing left, right, and center. That's not saying that there's not going to be people that are going to have to foreclose on properties, but look at these stats. So this goes all the way back to 2012. This is from CMHC's site, and we could just look at Canada as a whole because I think that's going to be indicative of what's happening in the entire marketplace. If you actually go all the way down to Q3 2022, you can see the delinquency rate is actually lower than it was last month and the month prior and the month prior and the month prior. And this is something that tracks back to 2012. The delinquency rate that we're seeing amongst the purchasers of homes is far less than the media is making it seem. We actually got some stats from a lender recently indicating how many people were on fixed, how many were on variable. If you want that data, just jump in the comments or send us an email. I'm happy to share that insight, but it's a far lower number, and people seem to have adjusted to the higher cost of borrowing, which goes into our next point. Let's dig into the stats and we'll see what that actually means. All right. So on to one of my favorite parts of the streams. Let's talk the statistics. I will take you through InfoSparks and show you all this data. But first, I want to talk about the CREA headline. So nationally, home sales declined 3.3 month over month in November. So that means the number of actual home sales declined. The actual monthly activity came in 38.9% less than November 2021. I don't think there's any surprise that we are selling less homes today than we were last November, given how crazy the market was. The number of newly listed properties is edging down 1.3 month over month. That's an interesting stat that less homes are coming to MLS. We'll explore what that means when we dig into the stats. The MLS home price index declined 1.4% month over month, down 4% year over year. And lastly, the actual national average sales price was down 12% from last year at this same time. Keep in mind, there was a big spike in February. So you heard 20, 30% drops. It was from that peak. We're talking comparing last year to this year. It's about a 12% decline year over year. Let's dig into the historic statistics and really extrapolate what that means. So if you're getting any value from this video, hit that subscription button, jump in the comments. Our Prime Nation community is the most important thing to us. We want to deliver value. If there's stats you want covered that we haven't delivered, please let me know in the comments, and we'll definitely do that on the next episode. Let's go through the average sales price. So today in L-Star, so let's dig into the average sales price. So in the ITSO board, which covers our entire territory and gives you a nice snapshot of some diverse primary and secondary markets, the average price around $655. You look at the peak, it was $875 in February. And if I compare it to November of last year, you are looking at $725 down to $655, which is that 12% adjustment that they were talking about. So the number of new listings tab, this one always gets people because look at the cycle. It is almost the same every single year. So there's 8,079 new listings. If you go back to November last year, it's 7,335. So more listings this year than last, but just notice the trend line. It's going down because guess what? Every single year, December, historically, this trend line does carry right through. Again, the number of homes for sale, you can see it bottomed out and then it went right back up, had a little bounce, came back up, and it's going back down. I wouldn't be surprised if it follows a similar cycle as it has the last number of years. We're sitting at total number of homes around 17,000 in November. Actual number of sales. So the homes for sale graph, another very interesting one. And you're noticing cycles historically. You know, you all lived through balanced markets before. You've seen these cycles. It really did trend down to 2020, got driven into the dirt into February, December, January of 2022. Came right back up over the summertime. And I wouldn't be surprised if it cycles back down going into the spring. And the number of actual sales, also a very similar trend line, right? You're seeing in June, the number of sales, you know, processing April. If you go through July, you're seeing summertime. You're seeing when people are out shopping, looking at houses. And then you're seeing typically not a ton of sales in the December the January months, February, until you get to this weird trend line where that all got flipped on its head during the 2020 to 2022 bull run. Average days on market, we are hovering at 22, steady from last month. When we did the update, I surprised a lot of people, and they said it seems like houses are sitting on the market forever. In certain asset classes, yes. In others, the average days on market's 22 days. So if the home isn't selling, review your pricing, your marketing, or your negotiation strategies. Sales are still happening every single day. The months of supply, what's fascinating is we've got 2.8 months of supply. Go back to September 2019. We have less supply than we did in September 2019. And if you go back before that, when I got in the market, it was 6 months plus of supply going all the way back to 2009. You really notice that we actually have less supply now. And I think that's going to be a problem going into 2023. Percentage of original list price. This is how much over asking people are going. At the peak, it was 120% over asking price. And now people are getting deals, but they're still selling for on average 95.9% of list price. So if you're a buyer lowballing every property that you see, start running your math. What's 95.9% of their list price, and maybe base your negotiation strategy off that. Not in certain instances, you are seeing massive reductions. I think not every agent is created equally. Some people are really stressed. They just need to get a sale done, and they got that commission breath. Stay away from those people. Find people who actually know what's happening and where the data is and how to navigate it. And I should clarify, the last stat I ran into was the percentage of original price. So that's before they did price reductions. The percentage of list price, there's some small modifications to that. List price to sale price might be different because you might get 97% of the price after you reduced it 200 grand. I personally like the percentage of original price a little bit better. Price per square foot, you can see that it went all the way up to $559 in February 2002 and has dropped down to over that 400 mark, but you're still well above where it was in 2019. 282, 275 is what we would look at. So just understand the metrics of what you're purchasing and how that may impact that. And lastly but not least, the total dollar volume of real estate traded. So $3.1 billion of real estate traded last month. So keep in mind, sales are still happening. I think there's a huge misnomer that is completely ground to a halt. It may feel like that if you're in the marketplace, but there are still sales happening. We shifted back in May. We saw this coming. You can go back to our market updates. You can see all the content that we put out online. The way we are selling is completely changed. We are resources of information. We need to be able to interpret the information, go and find it for you, disseminate it, and it affects our pricing, our marketing strategy. Buyers, boots on the ground, the way I'm having conversations with them is completely changed. The people we're working with has completely changed. If you want any more of those insights, feel free to send me a direct message, or I can connect you with the Prime team, jump on a quick call and show you what's actually happening in the marketplace. It may surprise you if you're looking to buy, sell, or invest. So lastly, let's wrap up with some shocking predictions. So yes, I'm a real estate agent. No, I'm not going to tell you that everything's always going to be amazing and you just have to put your head in the sand and buy now, buy now, buy now. But I do think one of the most surprising predictions I'm going to give you is I actually think the increase in sales as a whole over 2022 is going to happen in 2023. I think there was so much uncertainty in the marketplace from that May until September market. There was no end in sight. Nobody knew what the Bank of Canada was doing. They didn't really know how to navigate the massive increases in mortgage rates. What I saw in the last Q4 of 2022 is people really adjusting to the higher cost of purchasing. I saw a lot of sellers calling us saying, hey, I think we've peaked. We want to sell our properties. And in many cases, that was true. And I think that the next run are going to be people looking to purchase properties or get into the marketplace and run up that next trend line. Because I do think that the prices have definitely discounted to the point where in certain instances, I'm seeing properties trading that are in phenomenal long-term neighborhoods, are great assets, and will be a portfolio builder for other people. But I think it's one of those transitional times where you're going to have people that made a ton of money in the bull run that are offloading assets. Sure, they're going to want to maximize the price. I think you're going to have other people trying to do the same thing. They're going to sell at a much deeper discount that they should. So understanding the micro is absolutely crucial in 2023. Another prediction as well is the rental market we noticed went bananas in 2022. It dropped a little bit, ramped right back up in fall, and then leveled out a bit in December. I think it's going to hold a little bit more steady, and I think people are going to be a little bit more thoughtful about rental rates going into 2023. So I think we're going to see a little bit of stabilization when it comes to rental rates. I think you're going to see people get out of the investment rental, short-term rental game and I'm going to see other people go into it. So I think you really need to ask yourself, at what cycle are you in your life? What do you want to do? If you're one of those people that wants to get out of the industry, that's okay. If you're one of the people that want to jump into it, that's okay. But that goes to my further point that the dollar volume of actual transactions, I think, is going to increase because people understand the ground rules and at least have a little bit of a better idea of how to navigate it. Another big prediction, I think, for 2023 is I think the real estate market saw what's coming before everybody else. I'm starting to hear when it comes to venture capitalists, if you look at Silicon Valley and you look at people raising funds in tech, they're having a much harder time getting the valuations that they could have gotten a year or two ago. I think you're seeing businesses tighten up. I see business owners picking up their shovel, getting their skill set sharpened, getting into the actual weeds. I'm doing it on a daily basis. I intend in 2023 to be in the actual production more than I ever have before. And I'm excited about it. I like what I do. And I think we can have a really big impact if we pick up our shovels and get back to work. I think people that are looking for gainful employment will find businesses that are willing to employ them and pay good money. One thing I noticed last year was it was very difficult to find reliable people across all industries, so much so that reliable people will definitely get paid very, very well and could contribute to their society bigger than they ever had before. So let me know what you thought about the real estate market update. Did I deliver any value? Jump in the comments. Let me know. If I didn't, let me know what I missed and I'll cover it next month. Make sure you smash all the links below. Get on the Prime Insiders newsletter and connect with us. More than anything, we want to know who you are and how we can serve you. Thanks again for joining us, and I'll see you on the next update.